Let me start by saying something that may actually sound unreal. So, if month-end reporting feels chaotic in your organization, it's probably not because your finance team is slow, I believe, and it's definitely not because you need better accountants. Most month-end chaos is created long before even the month-end arrives. It starts quietly inside the budgeting process. I believe so. I strongly believe. So today I'm walking you through three budgeting mistakes I see all the time in growing and emerging nonprofits. Mistakes that turn every month end process into stress, firefighting, and last minute explanations. So if any of this is familiar to you, stay with me. So I have worked with nonprofit budgets for almost 2 decades across local organizations, regional teams, and even complex multi-country nonprofits. I've seen budgets at every stage, from Excel files that are held together by hoping that nobody will go in and mess the formulas and mess the whole things, keeping copies of copies, downloading backup copies, to very highly system driven environments with donor, board, and audit scrutiny. What I know for sure is most month end chaos in many occasions has nothing to do with weak accountants. Not at all, I believe. In such cases, it's usually the result of budgeting decisions that didn't account for how work actually happens. Let me explain by aligning the mistakes that I have seen. So, mistake one, most of the time budgets are written such that they ignore how money is actually spent. How do I say this? For example, you approve a clean annual budget, but during the year, expenses are incurred before approvals. Costs are shared across programs, but budgets are sitting in one place. So staff costs, you find that staff costs are split informally, not structurally. They are in one pool in the budget, but as they are spent, you are expected to spend them at different areas and under different departments. So when month end comes, finance is forced to manually fix the reality, reallocating of costs across, guessing percentages of LOEs and who sits in what program versus admin versus fundraising. It's never clear to them. So it's a guessing of the percentage because this was not taken care of during budgeting. And as a result, they will always be posting late journals. This chaos doesn't come from accounting for sure. It comes from a budget structure that didn't match operational behavior. So the key insight here that I can say is that if your budget doesn't mirror spending behavior, month end will always feel reactive. The second mistake is that treating the budget as an annual exercise. So the second mistake that I see is this one. You treat your budget as a one-time event. You build it, you approve it, and then you move on. But your organization doesn't behave in that same way. Your organization doesn't stay still within that 12 months. There are new grants that are coming in. There are hiring timelines that are shifting from what was indicated in the budget. Activities may change because of the operating environment. Even priorities evolve, things come up. Even sometimes things change in the middle of the year, significantly so that you may need to change how you are even spending your money. Yet the budget stays frozen. So by the time the month end arrives, finance is explaining variances that leadership didn't even realize were coming. Nobody understands what has happened because the budget remains static, but spending was haywire. Then the month end becomes a surprise. It's not a confirmation of what was happening, but everybody is suddenly becoming surprised of what's coming out of the accounting system. And so when reports feel this unpredictable, then confidence, of course, starts to erode. A static budget in a growing nonprofit creates dynamic confusion, and it's one of those things that does not help at all. Then, mistake number three, Budget bills without ownership. This third mistake is subtle but powerful. Budget bills for people, not with them. So you find that in some organizations, especially the beginning, the growing, the very beginning growing, just emerging, you find that finance prepares the numbers and departments receive them. So departments are always waiting to receive the budget from finance. So and the ownership quietly disappears because the finance imagine that the budget has already been delivered to the departments and it's there. The departments also believe that the budgets were written by finance and they belong to finance. So program people at that time don't fully recognize these figures. Managers don't track against them and variances are discovered too late. Then month end turns into tension. Finance is chasing explanations, managers feel questioned, leadership feels frustrated. But the issue isn't discipline, it's just the disconnect. When people don't feel ownership of the budget, they don't protect it, and also the month end doesn't really make sense to them because there is disconnect, there's no clarity between them. So when these three mistakes exist together, here is what you see. You'll see longer month end closes, you will see late reports of course, you will see very many manual journals in the accounting system, and definitely this graduates into defensive conversations. And over time, something bigger happens. Your organization starts losing financial credibility with leadership, with boards, and eventually with donors. Month-end chaos isn't loud at first. It becomes normal because it becomes like the culture of the organization. No one really pays attention to it. Everybody feels like something is wrong, but nobody can put to pen what exactly is wrong because it's very subtle, and that is the real risk. If month-end feels painful in your organization, I want you to hear this clearly. The solution isn't pushing harder at close. It's fixing what's happened before close, starting with how your budget is designed, used, and owned. For example, do you have a standard planning time? Is it clear that how the budget template is designed? Is there involvement of programs in terms of and even leadership and finance as a team during the planning process to make sure that what is being captured in the budgeting template resonates to what the organization wants, what the leadership wants, and even how the program teams are spending the money. Secondly, are we alive to the fact that budgets cannot be static? That as the organization changes, as there things emerge, then we need to keep the budget as a live document because then it needs to align to the changes that we experience as we go into implementation. And also, is it clear who the budget holder is and their role as a budget holder? Are they responsible for building the budget? Are they responsible for monitoring the budget? And what is the exact role of finance in the whole process of budgeting, planning, and also during implementation up to the time that reports are being discussed? So budgets aren't just financial documents, they are operational tools from where I sit. And when they are aligned, month end definitely becomes calmer, faster, and far more reliable. So if this video resonated with you, you can subscribe and watch many more of this because financial clarity doesn't come from working harder. It comes from building better systems. Thank you for listening and see you in the next video where we'll start talking about how our internal controls supporting budget implementation, planning processes, and finally achieving the financial clarity for non-profits, whether they are small non-profits, whether they are emerging, whether they are in the development stage, or even whether they are multinationals growing but still needs financial clarity in different aspects. See you in the next video.